How much tax are you going to owe this year? Let me help you figure that out in today's video. So in a previous video, I discussed the difference between tax planning and tax projecting. And right now we're going to work on tax projecting. So this is not a minimization strategy. This is not, anything to help get stuff better. This is just because a lot of clients come to me and they want to do what we call a paycheck checkup. And granted, there can be complexity in it, but we're going to do just a really basic, simple example for you. And then it'll get you kind of close to knowing if I can adjust my withholdings. I'm over withheld. I'm going to get a huge refund, and I don't want that. I'd rather have that for Christmas presents or something. So what you need to know is what your total income for the year will be. And then we can maybe look at some deductions too. But for the most part, the standard deduction has been adjusted. So most taxpayers will just take the standard deduction and we'll just use a plain $24,000 because it's easy for a married person. But we can talk about a few other things. So grab your most recent pay stub. If you're going to be filing married, filing joint, grab your spouse's most recent pay stub. If you had any other jobs during the year, grab the final pay stub from each of those jobs. Got to have each of them. And we will start with that. Now, I've made a little worksheet to help you compile some of this information and do some of the calculations. If you would like that worksheet, I'm giving it away to everyone who subscribes this month. So, and you can share it with your friends by asking that, share with them. Here, you want this really great worksheet to help me figure out what my tax liability for the year is going to be? Ta-da! It'll be a little PDF that I can send to you that you can just fill it out and work the numbers yourself. But let's just assume on a really basic level, you're one person. Your wife does not work or your husband does not work, so you only have the one income for the year. We're not going to assume kids. We're not going to childcare. We're not going to assume any adjustments to the standard deduction on the first one. So get your most recent pay stub. Now, hopefully, this pay stub is going to show what on average your earnings are going to be for the rest of the year. What your per period. If it doesn't, also grab one that shows what your typical earnings per period are. So on your most recent pay stub, you're going to pull out year-to-date gross income. And you're going to write that in the little column that says year-to-date gross income. There's also going to be year-to-date pre-tax deductions. And you have to look at your pay stub. They're all organized in different manners. If you've worked for different employers, you've seen that they have different ways of keeping up with this. But it's possible that you don't have any pre-tax deductions. It's possible you don't have any post-tax deductions. An example of pre-tax would be 401k. So your 401k is going to be taken out before tax. An example of post-tax is going to be uniform reimbursement, or what are some of the other ones? I can't think of anything right now. My mind is drawing a blank because some things can go back and forth. But you're going to see them grouped in two different areas. So you want to get the pre-tax deductions year-to-date. You want to get your year-to-date federal withholding, not FICA, not FUTA, not METI. It's going to say FIT or federal withholding. FIT means federal income tax. You're going to also want to get your state year-to-date withholding. Now, if you live in a different state than you work, this is not simple. But if you live and work in the same state, much easier. We can work with that. So in those, you're going to have that one column of this is everything so far this year. Then you're going to look at your check. That's your standard example of per period earnings, and you're going to use that one to annualize. So look at that first check we looked at. What pay period were you paid on? Okay, you were paid on September 30th, and you get paid twice a month. That means you're going to get 2 more pays in October, 2 more pays in November, and 2 more pays in December, which means there's 6 more pays in the year for you. Now, if you get paid, some people get paid 24 times a year. That means twice a month. Some people get paid 28 times a year, which is every 2 weeks. So that means you get a couple more pays per year. It all works out the same because it's just they take your total number and they divide it. But you do need to know, because you need to know if you're going to have 6 pays left in the year, you're going to have 7 pays in the year. Do you get paid monthly and you just have 3 pays left in the year? Did you pull a year to date that was in August, and so you have to take into account September? So do a little thinking on that. How many more pays from that other stub do you have left in the year? So when you look at the stub that has your standard per period earnings, you're going to take a column and you're going to pull out, this is the pre-tax earnings total for that period, not the year to date, but for that period, because you might have, incremental earnings, or you might have some other thing, you might get paid shift wage or something like that. So you want to just make sure you pick up all of it. You want to pick up how much is your federal income tax withheld per period, your state income tax withheld per period. You're going to take those numbers, and each one of them, you're going to multiply them times how many periods you have left in the year. Whether it's you get paid twice a month, so you have 6 left, or you get paid once a month and you have 3 left, you're going to multiply that. And that number you're going to add to your year to date. That is your column of projected annual earnings and withholdings. So that projected earnings less your pre-tax withholdings, that's going to be what's going to be in box 1 of your W-2. Because like your 401k, you're not taxed on. Your health care, you're not taxed on. Your dental, you're not taxed on. So you have to subtract that from, sorry, there's birds. They're distracting me. They're so cute. She almost flew up underneath me. So you're going to subtract the pre-tax payments, healthcare and all that, but you've already calculated that there. And then you're going to take that number, and using the worksheet, use a standard deduction of $24,000 if you're married, or $12,000 if you're not. And using I'll put a link at the bottom for how you look up what your total tax is for federal. So I usually just drop it into my tax software because it does all the calculations for me, and I can see and go, oh, well, they were really big givers, and so they don't take the standard deduction because they give a lot. Their deduction is higher because they itemize. Or, also the child and dependent care credit this year is going to be much higher. But this is just kind of a thumbnail tool for you to look and say, okay, roughly, this is the highest number before we start taking out charitable giving or health, medical things if you're subject to that, for deductions for, extra HSA or did I already say charitable giving? Dependent care credit, child dependent care credit, things like that. So this is before we take any of those out, just so that you can get an idea when you look at these tables and go, okay, here's my number. My number is $50,000. So you see where you fall into those credits, or not credits, into those brackets. And the previous 2 brackets, you just pick up the total tax number. So, your 0 to 19,500, whatever, you just pick up that total tax number off of that. And then the next row, you just pick up that total tax number there. And then you have to calculate the one on the line you're on for the tax bracket you're currently in. And when you have that total tax number, then you can compare that to what your federal projected withholdings are. And if it looks like, looks like I get a pretty big refund. You know, you can maybe take it easy on your withholdings and make an adjustment, especially if you know in the previous year you had a big refund. You might be okay. Or let's say you had a bonus. Bonuses can be tricky because a lot of employees, they get over withheld on their bonuses because the employer has to annualize that bonus. So they say, okay, well, he gets paid 24 times a year times this bonus means he's going to make $600,000 a year, which is not your annual salary, but they withhold it as though it were. However, that can bite you because some employers opt out of that method of calculating, so they only withhold at 15%. And if you get a big bonus and you're in a 22%, which is an average tax bracket, if you're in a 22% tax bracket and your bonus is only withheld at 15%, you're going to be short 7% on the bonus. So that's why it's good to take a look at these things. But I just want you to get comfortable with playing with your paycheck, trying to project out. And there's going to be more detail in the little worksheet. If you want to get that worksheet, do subscribe. I can reach out to you through YouTube. I get a ping every time somebody subscribes, so I can reach out to you, get your email, so I can send you that PDF so that you can do this calculation on your own. But if this content was useful, helpful, informative, educational, as I certainly hope it is, I would appreciate it if you could like and subscribe because it does push this content out to more people. So take care and enjoy your fall.